Hey, did you get the letter? You know what letter I'm talking about. The letter the IRS gave you. The 6416. All right, it looks like this. All right, I know I have one over here. All right, found one. It looks just like this. And it basically goes over the credits is refundable, age 17, how much money you'll get, and it gives you everything you need to know. Yeah, the child tax credit is coming. It's really coming. It feels like Christmas in July. Parents are just rubbing their hands together, ready for that money to fall out of the sky. And I can understand, this is going to be a large amount of money coming. In 1997, President Clinton signed the Taxpayer Relief Act of 1997. That act gave the very, very first child tax credit, and it has expanded over time. In the first year it was enacted, $23 billion of the credit was issued, and it went up from there. And it hit the roof in 2018 when the Trump administration came in and made it $2,000 per child. On March 11th, the Biden administration expanded it to the largest it's ever been. Ever. The reason it was created was to help parents ease with the financial burden of having kids. Having these little rugrats is not cheap at all, and the government understands that, especially after COVID. One of the biggest insecurities is food insecurity. And this money is coming at the right time. I mean, like right now is the right time to send that money. Let me just give you a quick example. I went to the supermarket, right? So I checked my bank, and my bank said, yeah, you can go. But as soon as I got there, things got real fast. The prices for eggs was out of control. Some of them were $3 or $4. I mean, the price was getting crazy. See, I get eggs, lamb, bets for the kids, and it's like $5.79. Now, milk was crazy. Milk is going from like $5 to $3. Some of them even $5.49. But we drink almond milk because I'm trying to put real nutrients into the kids, and that's like $3.99 for milk. It wasn't that before. And I know what you're saying. Wait, what is the point? What's the point of all this? Let me tell you what the point is. I got to the cash register and it said $54.16. I almost fell down because I couldn't understand, how did it get to that? Only got 17 things. I hesitated when it said to buy. I paid for it. I got the stuff. But you know, when the receipt started to print out, I was waiting for it to come out because I had to look at this. How did it get so high? I got ramen noodles. How did it get so high? And you know how it got so high? I'll tell you right now. It's called inflation. Inflation is crazy right now. I know they say it's temporary, it'll work itself out, but that bill at the supermarket wasn't temporary. It coming out my bank account wasn't temporary. It felt very real. And inflation is very real. It's so real that the Federal Reserve Bank of Cleveland used Legos. Yes, I am not making this up. Use Legos to give an explanation of how we should calm down on how this is going to be so temporary. It got removed. You can't find it anywhere because it made no sense, because they had the Legos running in the street screaming once they realized the prices on everything was going up. In one of the videos, they showed one of the Lego guys trying to buy a fruit. It used to be $1, now it's $2. The Legos are running and screaming, holding their heads like, ah! And at the end of it, they made it seem as the bank is going to come and release everything and make everything cool. It got taken down because it made no sense. So inflation is here, and this money is needed because people are struggling. So this monthly amount of $250 or $300 or $1,000, whatever it's going to be for you, is definitely needed at this time. In this video, we're going to talk about 3 main things. Why are you even getting this money? Why are they doing it? How will it work? How will it work for 2021, which we're in for the advancement? And how is it going to work for 2022 when you file your taxes in 2022 for 2021? And last but not least, should I opt out? This is Carlos Fraser from Tactical Tips. Let's jump into it. Be strong. Why are we getting this money? The main goal of this money is to bring millions of families out of poverty. The money is to ease the financial burden, especially food insecurity that we talked about. And I'm not talking fake food insecurity. I'm talking real life food insecurity. 50 Shades of Gray food insecurity. Real deal food insecurity that a lot of people have, having nothing in their cupboard. Now, I had some fake food insecurity. It happened like last Saturday. I was chilling at home, about to watch a short video from my homegirl Dinah. My two sons, I told my wife, they be plotting on it.
Daddy!
Yes!
Daddy!
Oh, God. I'm coming.
We have no food for breakfast.
I know we have food because I just bought food from Stop and Shop. I know we have it. So there's no way that we don't have food. I know it.
I checked. We have no food at all. All we have is mint. We have no anything.
You guys picked the wrong one today because I know we got some food in here. All right? No. We got eggs and we got sausages. You guys have food to eat here.
I don't eat meat anymore.
What are you talking about? You ate chicken last night. You had chicken last night. You don't eat meat anymore.
I watched a documentary last night. It was about eating meat. And bro, it's disgusting.
All right, you know what? I'm not going to oppress you, my young kings. We got something else. We got almond milk. See? Almond milk, right? And we got cereal. How about that?
Cold milk hurts my teeth, Mom.
All right, I'll warm up the milk. How about that? Warm milk?
Warm milk hurts my tummy.
Warm milk hurts your tummy?
Yeah.
All right, so the plan is I guess you guys are going to starve because cold milk, warm milk, all this stuff, I don't get it.
Cooper,
Like,
plan A. Uber Eats.
No, we're not doing that. No Uber Eats.
Cooper, plan B. DoorDash.
No, we're not getting DoorDash. Stop it. Stop it.
Relax, man. Calm down, Daddy.
Y'all gonna eat this food. I don't care what you say. You two are gonna eat this food.
That sounds like abuse to me. Cold Blue. Child Welfare Services.
I'm telling you, they be plotting on us. All jokes aside, food insecurity is real. COVID-19 may have a vaccine, but food insecurity and poverty has real inequality. And this is the main reason why we are getting this expansion. How is the child tax credit going to work? Very first, let's just ease some understanding. The child tax credit did not change. What the Biden administration did was they expanded it to make it bigger. They put another layer on top of the child tax credit. The child tax credit changes from the Trump administration of $2,000 per child still exists. The Biden administration just expanded it for families under the threshold for 2021 only. Once again, they're trying to extend it, but that's how it is. To understand how the law is going to work, we have to talk about 5 main small points about the child tax credit. Point number 1, the amount of this expansion. If you take a look at this chart, the 2020 child tax credit of $3,600, you see the child tax credit of $2,000 is still there, but then that green section of $1,600 is what Biden did. He extended it. He gave you 80% more inside of it. The same thing for a child from the age of 7 to 17. The child tax credit still stays at $2,000. The $2,000 still exists, but they just put 50% more on it if you have a child from age 7 to 17. So the child tax credit is still the same at $2,000, but we have just extended it for 1 year only. 2, there are certain tests the IRS is going to have. There's going to be the age test, the relationship test, and the residency test. The age test is what it is. With the age test, it's fairly simple. However old you are by December 31st, 2021 at 11:59 p.m. is what your age is going to be. So for example, if you have a child that is 6 and they turn 7 in December, they're going to be considered 7 for the whole year. And the same thing, if you have a child and they are 17 now and they turn 18 in August, they've been 18 for the whole year. So the age test is very, very important because you have to keep that in mind when you look at these exemptions. Now think about someone that has kids and they have a quintuplets and they have like 5 kids coming out. You know they're gonna call a doctor like, listen, we need to do a C-section. That's a lot of money right there. She's ready. I know she's ready because we want that paper. Then you have the relationship test. The relationship test is not that confusing. So if you go to the IRS website, to be a qualifying child for the child tax credit, the child must be your son, daughter, stepchild, adopted child, foster child, brother, sister, half-brother, half-sister, stepsister, stepbrother, grandchild, niece, nephew. So as you can see, the child tax credit, a person can be a child, but it doesn't have to be your child. And then the most important test is the residency test. Now with the residency test, what the IRS says, to qualify for the child tax credit, the child must live within the same home as you in the United States of America for at least half of the year. So for 6 months out of the year, that child has to live with you for 6 months. So when you go do your return, especially here at TaxGo, we want proof that the child has the same address as you. So you have to remember the residency test. If you don't remember any of the tests, the residency test is one of the most important tests, and that's what the IRS is going to look for most importantly. Number 4, the phase-out test. So to understand number 4, the phase-out test, we have to go back to this letter. Now in that letter, it says right there, the maximum credit phases out for higher income taxpayers. So you see the maximum of $75,000 for single, $112,500 for head of household, and $150,000 for married couples. Sometimes when people see that number, they say, oh my God, I'm single, I make $78,000, I'm not gonna get any money. I'm not gonna get this expanded child tax credit. That's not how it works. There's a phase out that is calculated in it. So if you take a look at this chart that we did, we'll do the phase out for single. So once again, the child tax credit is still there for $2,000. The expanded child tax credit over there in the green is there, but once your income goes over $75,000, they shift a little bit of it off. So for every $1,000 over the 75, the expanded credit is reduced by $50. For example, if your income in 2019 or 20 was $78,000, your expanded would drop $1,450 for ages 0 to 6. So you don't get the $1,600, you'll get $1,450. So for head of household, once again, the head of household phase out starts at $112,500. For every $1,000 over, let's say you make a $115,500, same thing, $1,450 for ages 0 to 6. Same thing happens for married filing jointly or widowers. The phase out is $150,000. The expanded just gets pushed back a little bit. I want to make sure you really understand the concept. If you get phased out, let's say you get totally phased out of the expanded amount. Remember the expanded amount that the Biden administration did. If you get phased out of that, it does not mean you will not get the child tax credit. You will still get the child tax credit. And the best way I can explain this is if we take a look at this chart. And if you look at it, it basically shows if you're unmarried and you make less than $200,000, you still get the child tax credit. The money still comes there because what kicks in is the old rule from the Trump administration. We take a look at for married couples, the phase out starts at $400,000. So if you make, let's say, $300,000, you won't get the expanded amount, but you still get the $2,000 per child under the age of 17 for the child tax credit. And last but not least, the number 5, the credit is fully refundable. Now, in the past, what happened is you have to have earned income. You had to have at least about $3,000 or $250 of earned income. So people who were totally unemployed, had no income, that were really in poverty, did not get the child tax credit. Sometimes they would give the child to someone else or a family member. Now that person can get the child tax credit. Yo, that's going to be crazy because people are going to get a large amount of money. In addition to that, in the past, the child tax credit had a refundable amount, meaning that if you had no taxes owed, they would give you $1,400 of the $2,000. Now, with the Biden one, you'll get the full amount. So let's say you opted out, you had no tax due, you get the full $3,600 if you're the child under the age of 6, or you'll get the full $3,000 if you have a child over the age of 6 and under the age of 17. So that is going to change the game. People are going to be calling like, yo, listen, I know I owe you some money, but I'm about to get paid. All right, enough of that. Let's talk about the payment schedule. So you jump through all the hoops. You have you're not going to be phased out. You have the age requirement. You have the relationship requirement. You have the residency requirement. You know everything. You know you going to get this money, right? So the schedule comes. The first payment date is going to be, boom, July 15th. The next payment date is going to be August 13th, not the 15th. Don't look for that money on the 15th. It's going to come on August 13th. And then September 15th, October 15th, November 15th, and December, yes, 15th. Those are going to be the days of the payouts that the IRS is going to do. If it's going to work well, who knows? But that's how it's supposed to happen. I know some of them supermarket managers got those dates in their Google Calendar. They're like, okay, August 13th, it's about to get real. Because the supermarket is going to be bumping. It's going to be like the first of the month and Thanksgiving all in one. It's going to be wild. And I hate going to the supermarket on Thanksgiving. My wife always sends me to the supermarket on Thanksgiving. I think we should move Father's Day to the last 8 hours of Thanksgiving so I can say, no, it's Father's Day. So what's going to happen? The government's going to send you another form. Just like the form they sent you before. Remember that form? Let me get it again. This one. The 6416. The IRS is going to send a secondary letter, and it's going to be the letter 6417. And the 6417 will basically give you the amount that the IRS is going to probably give you. Keep that letter. That letter is very important. And in those payouts, you're supposed to get 50% of whatever the child tax credit they calculated for you. So now we know how it's going to work. Should I opt out? This is a hard one. I had to really discuss this one with some IRS agents that we knew, read the IRS code, read the bill that Biden passed in detail to really see, should some people opt out? And the answer is, it depends. So we're going to go over the 4 reasons why you should opt out. The number 1 reason, if your income is over the threshold, you should opt out. The reason I say that is because if you think that, let's say you're single and you're making $89,000. Yeah, there are going to be some phase out that we talked about, but you should probably opt out. You don't want to get caught up because what the IRS says is if we give you too much money and you owe us, you owe us. There's no exemption in there. There's no exemption if your income increased. So if your income is getting higher, I would say go to the portal and opt out. Number 2, if the number of children's changed in the situation. This is very prominent in people who have custody issues. Like you have odd months or odd years and the other person or the spouse has the even years. Now 2020 was the even year. 2021 is the odd year. So if you filed your 2020 taxes and had the child on there, the IRS doesn't know about your custody battles. They have no idea. So they're going to give you the money. So you should go and opt out. Now, the IRS does have a small, tiny tax law that allows parents, if the number of children's change, to have what's called a safe harbor election. Now, when I read this law, I was like, oh, this is ill. And how the safe harbor election works is, well, let me give you 2 examples how it works. So example number 1, single parent, 2 qualifying young children under the age of 6 in 2020. Her advanced child tax payment, which we'll call the ACTCP, will be $3,600. How we calculate that? The amount of advanced child 1 is $3,600, child 2 $3,600, total $7,200. They'll give you 50% of whatever that child tax credit is going to be in 2021. So 50% of $7,200 is $3,600. But let's say, hold and be known, that single parent only claimed 1 qualifying child in that year. So what the IRS is going to do is do an advanced reconciliation. And how they do it is a child 1, $3,600, because they only have 1 child. So the credit that they're going to get for that 1 child, if they're in a certain income threshold, is $3,600. The advanced child tax credit payment that they paid you in 2021 was $3,600. So essentially, the taxpayer would effectively receive no credit on her 2021 tax return because they already paid her out. But the first example, well, that's not the safe harbor. It's just netting against each other. We already gave you $3,600. You're claiming 1 child is $3,600. But let's go into a more complex example. So this more complex example is an example of how the safe harbor is going to work. And this is going to be the pain of what's going to happen next year. So in this example, a single parent with 2 qualifying young children in 2020. So she filed her return in 2020. She had a son and a daughter on it. Her advanced child tax credit payment would be $3,600. The amount of the advance is child 1, $3,600, child 2, $3,600, total $7,200. They give you 50% of whatever the total is going to be. So in 2021, they're going to give her $3,600. Oh no. She's not going to claim the kids. She has to give the kids over to the father of the child or the other spouse based on the custody. She didn't opt out. What's going to happen? The single parent files a return with 0 qualifying children in 2021. Her income is $60,000 in 2021. The first thing the IRS is going to do is what's called an advanced reconciliation. So they say, hey, the number of children on your 2021 tax return filed in 2022 is 0. But we gave you $3,600. The taxpayer now owes the IRS $3,600. But whoa, what about the safe harbor? What about the safe harbor law? This is what the IRS is going to allow in the safe harbor law. The single parent has a 3-step safe harbor method. So step 1 is to find the maximum amount that they got. The number of children that used to advance were 2. The number of children on the 2020 tax return is 0. Calculate the difference. The difference, 2 minus 0. You can answer it. What's 2 minus 0? 0? No. Get out of my class. You? 2 minus 0? 2. Thank you, Letitia. Guess. 2. So what then happens is they do 2 times 2,000. Because remember, the child tax credit is still $2,000. They calculate that your safe harbor is $4,000. That was your maximum safe harbor protection. So you owe $3,600, you have $4,000, you may not owe them any money. But it doesn't stop there. You got to go on to step number 2. So step number 2, you have to find out the phase out maximum safe harbor amount. And you're like, what the hell is the phase out? You've already got the $4,000. I'm good. Why I got to do anything else? Well, now we have to see about your income. Where's your income going to play? So the calculation basically says, hey, if you're single and you made between $40,000 and $80,000, you have help. If you're head of household, $50,000 between $100,000, there's help. And married filing joint, $60,000 to $120,000, there's help. And how they calculate it, for in this example, her income was 60. 60 minus the 40,000 divided by 40,000 minus the 80,000, the maximum is 50%. So negative 50%. Negative 50 times the maximum safe harbor 4,000 is a negative $2,000. So they're going to remove $2,000 off of the maximum 4,000 because your income is over the safe harbor threshold. Basically, you're over $40,000. Once you go over the $40,000 if you're single, or once you go over the $50,000 if you're head of household, or once you go over the $60,000 if married, you start to phase out that safe harbor election. So you're like, damn, $2,000? That's what I owe the IRS? No. $2,000 is not what you owe the IRS. $2,000 is now what you get to reduce from what they say you owe them. So in the last step, step number 3, find the amount you pay back. So they said, hey, you owe us $3,600. We paid you $3,600 last year. We gave you that $3,600. You got it every month, divided by 6 months. We already gave it to you. But we're going to give you the safe harbor election. We calculated that your safe harbor election is $2,000 because you made $60,000 and you're single. So you really just owe the IRS $1,600. And I know that lady's like, oh, thank you, Lord, Jesus Christ, because $3,600 made me start to shake. I wanted to do the Harlem Shake because $3,600 sounds like a lot of money. $1,600, it is a lot of money too, but it's better than $3,600. The biggest point that I want to make about this safe harbor election is that in this example, she really got away. Because think about it. She owed the IRS $3,600. She really only paying $1,600. So she got $2,000 that she wasn't supposed to get and doesn't have to pay that back. So that was number 2 about the safe harbor and then the changing of the number of children. So if you know you're going to be over the safe harbor and you're not going to have the same amount of children, you should opt out. Number 3, you just don't need the money. You don't need the money right now. You don't want the headache of figuring out safe harbor, this harbor. You don't have child poverty. You're living pretty much good. You just want to just wait till you file your return in 2022 for your 2021 taxes, and that's it. Let's just wait and just get it done. Then I would say opt out. Number 4, we have learned from the other credits, the IRS is slow on giving refunds. They're slow on doing what they have to do. So think about it. They had to do all these reconciliations. Some people are still waiting for their refunds right now. Right now, they don't have no money because the IRS is doing the reconciliation of their stimulus. So think about it. You got to do a reconciliation of your child tax credit. If you don't want to be bothered with that, opt out. All right, so the IRS has different deadlines to unenroll. So for the July the 1st payment, the date to unenroll was June 28, 2021, which is past. August, the date to unenroll is August 2nd, 2021. For September payment, August 30th, 2021. For the October payment, October 4th, 2021. For the November payment, November 1st, 2021. And for the December payment, November 29th, 2021. So you get to opt out of each month that you would want to, or the month to start. You have other dates to opt out. One thing that we learned about this whole opt-out thing is that married parents, both of the parents have to opt out. Marriage is a contract. It's all about communication. So don't get spicy with it. I would say, don't go like, hey, did you opt out of the child tax credit? Yeah, I'm going to do it. All right, cool. No, it's not going to work like that. You got to say, I opted out. And you should too, because if we owe money next year to the IRS, them alphabet boys are going to come for you, and I'm going to let them take you in them orange jumpsuits. Now, you're a pretty girl. Don't do it to yourself. There's some big girls in there. It's federal prison. The gates are high. As you can see from this video, the child tax credit is fairly simple, but it's complex. And one of the biggest issues that we're going to see, especially here at TaxGo, is that the government is giving the ball into the court of the taxpayer. There's going to be so many things that are going to go into it. Jealousy, greed, envy. People are going to just want the money and may not even qualify for it. Fraud is going to pop up. You are basically giving people their Christmas gift now and expecting them to play fair. I hope you enjoyed this video. I'm not trying to scare you. Just want to give you the facts so you understand the child tax credit. So you have educated yourself onto what to do. And I know some people are like, I don't even know what to do now. But look at the video again, put some questions down here in the comments, and I'll try to answer them as much as possible. This is Carlos Fraser from Tax Go Tips, and thank you for listening. Have a great day. I don't know what my fascination is about milk and eggs. I swear, I think milk and eggs is just the best ruler on what's going on in the economy. When milk and eggs are down, life is good. When milk and eggs are high, I don't know. It gets scary out here. So we don't have any food. We checked. Please say we don't have any food. We checked.
Damn, old man. Calm down.
Can't say damn.
Oh, man. Cold milk hurts my teeth, man. Oh.
Okay. All right. Imagine you're about to have like 5 kids, and it's December 31st, 2021, 11:30. You're like, yo, make it happen. Make it happen. You sound like the Amigos. Like, make it happen. Make it happen. It's a lot of money, though. Safe harbor is like, blew my mind away. It's ridiculous how it's easy, but it's complex. It's complex, but it's easy. It's easy and it's complex. It's complex and it's easy. It's easy and it's complex. It's complex and it's easy. It's easy and it's complex. All right. That is a wrap, people. Everybody back to work.